Okay, guys. So now I've given you basically the bread and butter of trading. I've given you the platform to trade on. Remember to use the link in the description if you're kind enough. Um, the chart setup website to draw your charts on. The economic calendar, which is also helping you determine market movements. But essentially, this here is the bloodline of the market. These candlesticks here. Um, so now I've given you those. I'm going to go on and discuss how to move your way, how to work around the stock pair platform, so you know you're not trading the wrong assets. Because believe me, it might seem really simple, but there's times when I've accidentally left it as a put, and sometimes it's been set to the max amount, which I don't want it to be set to the max amount. Sometimes it's just left there. I've clicked trade thinking it's 100. I've ended up trading 600. So got you. I'm not going to trade that one. But what we're going to discuss is actually moving around this user interface and what the different assets are and what they have to offer us. So as you can see, I've traded up my balance. If you're a new person who's been watching my videos, who hasn't watched my videos, this took me quite a while to build up. I don't know if you viewed it. It was almost double this. I think I actually doubled it. I've withdrawn quite a few of my profits. Obviously, I've lost a bit as well, but a lot of the money has been withdrawn to my account. So don't worry about that. Bigger than this number. But going back to this, so we've got binary. Okay, we've got Kiko, we've got pair, which are fixed, we've got pair floating, and we've got the education center. You don't need that because you've got me. Okay, so binary. Okay, so binary is, as I mentioned before, it's a fixed outcome. So they're offering you 69%. You have to decide whether the market will move up or down, okay, and in a certain amount of time. So there's not too much. It's a 50-50 chance with a 70% payout, and you just have to choose a time frame. So there's not too much to it. Okay, moving on to Kiko, which is different from binary. It's still under the category of binary, but it's slightly different in that there are no time frames. Okay, so I've had a Kiko trade actually run for 7 hours before. There's no expiry. So, for instance, all you have to do, if you're picking low span or high span, you're just essentially what you're saying is the euro will either knock out this blue line first, so it will go down, or will it go up? Now, the euro could just stay in between those two lines for maybe even a day. It won't, that's not possible because the euro moves too much. But, for instance, it could. We're going to get a cheeky trade on anyway, just because I can see the trend going up and it's just hit some support here. I think it's going to go up. And anyway, going back to Kiko. So, when we're looking here, you have the option of a low span, as you can see here, and we have the option of a high span. Okay, so you can see there's a great difference between the size of this. Okay, now usually when I trade Kiko, I'll go for low span because it's quick. You're in and out. You don't want to stay in the market too long because, say for instance, we're doing high span. I can guarantee you that it won't hit any of those lines before the news comes out. And by the time the news comes out, it could swing our trade in the other direction. So that's the last thing we want to do. Now, we're moving on to fixed pairs. So now, essentially, what you can do, you can trade. Okay, so what would be? So there's no currency pairs. It's just fixed stock options. So we have BT against Vodafone, Barclays, HSBC, Shell, BP, BMW against Daimler, never heard of them, HSBC, Bank of Scotland. Now, what these are stocks which are really similar to each other. Okay, so BT, Vodafone, they're like competitors. Barclays, HSBC, same again, they're more or less competitors. What it is you're saying BT, the stock price of BT will be higher than Vodafone in the next 10 minutes, okay? As you can see, there's a slight crossover. There's a change which is about to happen. I'm not going to trade on this because I don't really do stocks. But as you can see, they offer multiple time frames. So maybe, for instance, this is how you could trade it. Maybe BT's releasing some information about, their revenue, how much they've made this year, and their revenue could potentially be a lot more than they made last year. Vodafone, on the other hand, might release some data saying, they've lost a bit of money, okay, and a lot of people are moving from Vodafone to EE, a different phone company. Now, this would tell us that BT's stock price will definitely go up higher than Vodafone, okay? And, you could be cheeky, you could know the information, you could search it. So what I'm trying to say is putting the hours in, putting the work in, will pay you back a lot quicker than trying to trade real quick and trying to make quick profits, because those are the people that lose money in the end. It's the people that sit down and study are the ones that will make the money. So shout out to Nasir for that one. Now, obviously, 14 days, 30 days. If we found out the information, we'd be wanting to do by the end of the day. So, as I'm just showing you, it's real simple. Now we're going to pair floating. Now, obviously, it says which will perform better today, this week, this month. Okay. Now, as I mentioned, the easier to predict what's going to happen, the lower the percentage to pay out. So this is exactly like the bookies. Imagine BT was Arsenal, Vodafone's Scunthorpe United. Arsenal are going to win. It's a home game. They're definitely going to win. The bookies are going to offer you 56% if Arsenal win. Vodafone, which is Scunthorpe United, I doubt anyone's heard of them. They'd offer, say, 63%. Now, they're offering us a higher payout because they know that it's unlikely Vodafone is going to outperform BT, okay, based on the statistics analysis that has been done, okay. So you could just trade just off the percentages like that. I don't recommend it, but you could theoretically do that, okay. And so that covers the options you have to trade. So you have binary, Kiko, pair, and floating, okay? So now moving back to binary. So now we have the subheading. We have the currencies that you can trade. We head over here, you have the USA stocks that you can trade. So once the US markets, once the stocks are open, so there we go, we'll resume at 245, so not for a while. We have all these stocks here, okay? And Facebook is predicted to go up to 150 a share. So its current price is at 133. You could be cheeky, potentially say within the next 90 days, Facebook stock's going to go up. So this is just stuff I've heard. It's going to be going up to 150. But these are all the stocks you can choose from, and they also have indices. Okay, now FTSE 100. I can't bother to go through all of them. We have the S&P, the Dow Jones. We have Nasdaq, DAX, AEX, FTSE. And now I've just realised I've lost this trade. That's fine. That's okay. Now going to the FTSE. It's performing really well at the moment. It's been rising continuously. Okay, you can look back through the dates. So this is on the 31st of the 5th. And it's been going up, all the way to the 2nd, the 15th of February, okay? Now, just looking at the sentiment, just judging by it and saying it's in an uptrend, you could place a trade saying within the next month, FTSE is going to go up. Okay, so this is just little things you can do. Now, moving on to commodities, we also have Australian stocks here. Now, going to commodities, we have gold, oil, and silver, okay? Gold and silver, when you're trading them, they mimic each other. So obviously just think as gold is first. So whichever the way gold moves, silver's going to follow slightly just behind it, but in a less volatile way. It's just going to move gradually instead of doing big swings like gold. Okay. Now, so you have oil as well. So we have all the options to trade here. So I just wanted to show you the different options you can actually trade, because some people might just be clicking around thinking this is binary. Click on this one where it's not. So I just wanted to cover that. So now we're going to be moving on to tradingview.com, and this is actually trading off of the market and using the data that we have here, which might not seem like anything at the moment, but I promise you it will make sense. So what we do, I'm going to delete all of this. I should have just wiped the chart. I don't know why I'm doing this, but it's fine. Now, so we're going to be on here, and what we're going to be doing, I'm going to be showing you how to change the time frame. So really sorry if you already know this, but believe you me, I get a lot of messages of people asking how to change the time frame or how to change the candles. So I just want to make sure I've covered everything, so it makes my life easier and your life easier, because you can go back to this if you get stuck, and you can just look at the video and go through to each point you want to cover. Okay, so just looking through my questions, we've got how to change the time frame. So we have the 1 minute. Okay, now I'll explain what happens here. So each candle here is worth 60 seconds. So as you can see down below here, we have a timer. So it's 12:55, 12:56, 12:57. This will be 12:58. Okay, and this is a countdown to the next minute. So we have 18 seconds left. If we look at our clock, we've got 15 there, and we've got 15 also down here. Once the timer finishes, the new candle will then form. Okay, so we'll just watch the new candle form now, which will come in a second. I was going to be cheeky, try to catch a reversal, but I doubt it's going to move. Let's do a quick cheeky trade. So you can watch me take a live trade now. It's hitting, there we go. So we're going to try and catch this one here. Now, anyway, so we'll look at this market here. So when we look here, each of these candles are worth 60 seconds. Now up here, we can actually change the time frame. So we have the option of 3 minutes, 5 minutes, 15, 30, 45, 1 hour, and so on. And essentially what this means is, say for instance, we click an hour. That means that each of these candles are worth 60 minutes. Okay, so we have 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock. And there we go, we've just hit 1 o'clock and a new candle's formed. Okay, so it's really, really simple to get the hang of this. It's not much to it. I think our trade should be coming in as well. Okay, so this is the payout which we will get if this trade wins. I've just tried to catch a reversal because it's dropped quite a lot, so I'm going to try and catch with the reversal upwards. But anyway, going back to actually using the charts, okay? So when we look at the charts, we can see that you have the options up here to change it from bars, candles, Heikin-Ashi candles, which is an average of just a normal bar. This is more or less the price average. We have the line, which is the actual price. Okay, so some people just trade using a line. I don't know how they do it. And we also have Renko as well. So these are formed every time the market's moved a certain amount, a new bar will form. As you can see, if it's moving down, this bar will form and a new bar will form. But we don't want to go into that. We just want to stick to candles, okay? And there we go. There's both those trades won. So that's 450 profit on both of those. Makes up for the last loss. And that's more or less a perfect trade, just like that. But anyway, going back here, we can also compare assets. So maybe I want to compare. So this might be interesting for you guys. We compare Euro USD and we compare that against gold. And now, so if you're searching for commodities, it's not oil, it's not gold or silver. You actually have to type in the periodic table, name for it. So, for instance, gold, we have to type XAU. So that's gold, against the dollar. So that's how it's traded. Gold is always traded against the dollar. So gold against the dollar, which is USD, and there we go. So we're comparing the euro against the dollar. Now you might notice that the market moves, and these, when you compare these move extremely close, and they're almost similar, exactly the same. Okay. Now the reason this could be is that obviously the dollar, a lot of it's based on gold and oil, or maybe just certain things like this. So when the gold price goes down, it also drives. So say for instance, the gold price has gone down. That means the euro is going down as well. So that means the dollar is going up. So maybe the US has sold a lot of their gold, or the other way around, they're buying gold, and then it works both ways. But the important thing is to know that you can compare stuff like that, okay? And to delete anything off the chart, we just go here and delete it there. Now, when we look at this here, I know it doesn't make sense. So what we're going to actually do, we're going to go to indicators, okay? And what we're going to add in are the RSI, which is the relative strength index, okay? I'll explain this all to you when we do it. So as I mentioned, it's just called RSI. Click here and that will add on. We're going to also add the Bollinger Bands and a moving average. Now, there's loads of different options of a moving average. I find the 20, 50 or 100 or 200 moving average to be the best. So what we're going to do, you can see they're all added on here. It might not look like it's making sense, but it will. So we change the moving average. So you go here, go to settings, formats, input. Let's just change this to 20, for instance, okay? We'll change the thickness of the line just so it's a bit more obvious, and we'll also change this color to green so we can see it nice. It's nice and colorful. Okay, so when you look at this, this gives us an idea that this is market sentiment, and essentially what it's saying is that the market is in a downwards trend on this screen here. If we moved it maybe over here, we'd say the market sentiment, it's in an uptrend, okay? And what we can also use are the Bollinger Bands here, okay? But going back to the moving average, so I forgot to mention, so as we set it to 20, you might be wondering what 20 means. So length is 20. That means the moving average, the price of the last 20 candles has been averaged out into a line, just like this. So it will help you filter out the noise, and you can just get a nice straight line to tell you which way the market's going, instead of looking at these candles and scratching your head and saying what's going on. Okay, and now using the relative strength index, this purple box I've got down here, this indicates to us whether the market is oversold or overbought. So don't worry if you don't know what these mean. Essentially, when price, as you can see here, moves past down below the 30, that tells us that the currency, the assets, whatever it is, the commodity, doesn't matter, the financial instrument is undervalued, okay? So it's been dumped, the price of it's been dumped so much, it's come out the Bollinger Bands, the RSI's dropped below 30, traders are talking to themselves and saying, we've driven the price down a bit, we need to raise it back up, okay? So then they start buying it. The buyers come in, they push the price back up to a reasonable amount, and price the average price is always in the middle. So we're just looking around 50 here, but that's where price usually likes to go. So traders have driven the price up, and then as you can see, it's began to get overbought. So it's been overvalued, and then price comes back down again. Okay. So looking at this chart, obviously it's telling us it's in a downwards direction. It's trending downwards, and ideally, preferably, when we're trading and we know that it's in a downwards trend, the direction. So on an hour chart here, we would preferably be liking to take sell opportunities. So we'd be wanting to sell the market as much as we can. Okay, we don't want to be selling here. Okay, we want to be selling around the price line, just up here. Okay, so we know it's in a downwards trend.